So, welcome back to the Armchair Trader podcast. And today we're actually talking about the space industry, which is something I know a lot of people are very interested in. And it's certainly a sector that is moving very quickly indeed. So, on the program today, we've got Aaron Burnett, who's the founder of Spaced Ventures in the US, who's going to be telling us a little bit more about what's going on in the sector. So welcome to the podcast, Aaron.
Thanks for having me. It's cool to be able to, have these opportunities to share our story and, share what's going on in space. It's always fun to talk about.
So to kick off with, can you just give us a sort of a quick rundown on Spaced Ventures itself, what it is?
Yeah, so, Space Ventures really is a response to what we've seen in the industry with some of what feels like there's a lot of money going into the industry, and there is, but not a lot of money going to many young early stage startups. And essentially what we wanted to do was bring in the public to opportunities for early stage, high risk, potentially high reward investments in private opportunities, utilizing a regulation crowdfunding exemption that exists in the US, and there's one in the UK as well. I don't know what it's called exactly, but we call it Reg CF. So really, this is an opportunity to get any investor, accredited, non-accredited, involved in private opportunities, specifically in space. And space is difficult enough that there's so many different technologies going on, and a very harsh environment involved. So we needed to be able to focus on it to be able to really provide what we feel are the best opportunities in space for early stage space startups.
And this is something when people think about space, I mean, sending a man to the moon, for example, fabulously expensive project. Um, Even things like SpaceX and Virgin Galactic, you see guys like Richard Branson involved in that. Again, there's a lot of talk about just how expensive it is to get those sorts of high profile projects off the ground, literally and figuratively. Um, when you talk about crowdfunding, we're not really talking about huge companies or huge technologies here. Why did you decide to go with the crowdfunding model specifically? And is it really possible for a small company to make a difference in this space?
Yeah, so this is a very good question. So we have, a couple of nuances. Talk about the industry first, right? So the industry right now used to be all governments, then governments and billionaires, and what we're right now in is transition away from, strictly kind of a governance and governments and billionaires space into other investors. And we're really trying to accelerate the retail side of that, or the public side of that as well. But so that's kind of the nuance of what's happening. But honestly, a lot of the movements that SpaceX have made and other companies have made to lower launch cost have really created a lot of opportunity. Things like Starship, I don't think many people really understand what kind of effect that can have. Now, it's not flying orbitally yet. It's not, delivering cargo. But given SpaceX's strong track record, there's a lot of reasons to believe that they'll do it. It's just a matter of time. And but the amount that they can get to orbit, fully reusable, and the ability to deliver a lot of payloads to orbit from a few different places, whether that's in Boca Chica, Brownsville area in Texas, or off the Cape in Florida. There's a lot of possibilities there. Regardless of that, even if that doesn't happen, I mean, we've seen launch costs dramatically drop from like 75,000 plus per kilogram down to closer to sub 10, sub 5 in some cases, depending on how much you're ride sharing and things like that. And then there's smaller launchers like Rocket Lab, which I think they publish maybe like 20K or something like that, but they can be 20 to 50K kind of per kilogram. I mean, you're talking about still dramatic drops in cost. And so what that means is, getting to orbit and putting something in orbit is actually quite a bit cheaper, which is creating a proliferation of orbital, kind of an orbital economy. Right now, what is mostly up there are small constellations, from, we want to talk about these smaller companies. There are small constellations like Planet Labs or what have you that are essentially looking at Earth, gathering data, and then selling that data. Data is a very relatively easy to sell sort of thing. So if you can just have a sensor that happens to be, in space and collect data that no one else can get, you probably have some kind of market, right? I'm oversimplifying that, value proposition there. But the data market has been, I would argue, almost, fully robust at this point, but it's been growing and is growing continually. You've got people like Umbra, Capella doing synthetic aperture radar, which is using an interesting technology that allows for some pretty granular, essentially images using radar. And so there's some really cool opportunities there around selling that data. So all that to say, kind of wrapping it all together, right? The industry is moving towards a much more accessible model where small companies can actually make a decent impact. Having said that, it's still much more expensive than, let's say, a SaaS company or a software company. You might take $50,000 to get your product up and out to market and maybe start making a little initial revenue or something. Whereas, I'm thinking here as broad strokes, but if you are a space company, you're a hardware company. So hardware companies are already harder. And then you're also doing things that are, highly bespoke in most cases. There are some companies moving towards off the shelf type models for, space hardware, but a lot of them build it a lot themselves, or they'll use like, a kind of a form factor that's kind of standardized, like a CubeSat form factor, but then all the guts are their own thing. So they're building kind of bespoke things. They're, testing them in radiation testing and vibration testing and all this stuff. And then they put it up in orbit. And so it does tend to be a fairly still cost intensive sort of process. Now, what would have been maybe 10, 50 million before is now 1 to 5. And so to get a product up and start getting commercial revenue can take between 1 and 5 million for most space companies. If we're talking about going to the moon, that's a little bit different. If we're talking about getting into orbit and having a business, 1 to 5 million is totally viable now. So sorry for the long answer, but the industry at large is moving towards a much more viable space for startups. And then crowdfunding, plugging that in is just 1 to 5 million is much more accessible via crowdfunding than, let's say, a 10 to 50 million or whatever would have been even just a few years ago.
How would you say the sector is doing now? Is it in good health? I mean, it sounds like there are a lot more companies there now. I mean, a lot more smaller companies, but overall, as the private sector within space technology would you describe that as booming at the moment?
I do. You probably are not going to find many more bigger optimists for space than me. So everything should be taken with a grain of salt, of course. I don't really think about shorting space companies very often because of that. There's definitely snake oil out there, and I'll tell you that. I mean, space is fun, so with their kind of that cool factor that draws a lot of people that don't have much depth, and they will just put the space shine on it and be fine with selling that. So that means there are those out there. But as far as like the overall industry and most of the industry, there's a lot of cool opportunities happening. So like my next thing here for 2022, maybe it creeps in 2023, is the proliferation of on-orbit services. This is kind of an exciting thing, and this is an example of some of these subsectors within space as a larger industry that are just kind of coming out of the blue. This didn't exist, 5 years ago. So right now, on-orbit servicing is, essentially most rockets and satellites. They're essentially like a one-trip thing, right? They send them up there, they run out of fuel, they burn them up. Or they just float. They turn into space junk. They're not supposed to most of the time, but they can. So it's the equivalent of like if you were to buy a car, run out of a tank of gas, and leave it on the side of the road. That's kind of the way the industry is run right now. There's a lot of inefficiency, and so what that means is a lot of opportunity to improve that efficiency. So there's companies like OrbitFab, which, like, if I were to have said this 5 years ago, people would think this is insane or just kind of like a science fiction sort of thing. But there's companies like OrbitFab who have gas stations in space. They already have one. It's a smaller one that's, but actually starting to do, have some transactions, and they're building a much larger one now. That is an enablement for, a company that has a satellite in space to double or triple or, increase by 50% the lifespan of their satellite just by refueling, right? Much more difficult than I just made it sound, just connecting a satellite and refueling and all that. But in around that, you have companies that are doing, monitoring services. You have companies that are doing kind of grappling and, repair services. You have companies that are doing more of the space junk thing. Has got a lot of buzz, relatively a lot of buzz around, removing space debris. So, deorbiting things that can't be deorbited by themselves, all that kind of stuff. That's a growing economy. I think you're going to see quite a bit more buzz of how that happens. And what's cool about that is, like I said, 5 years ago, the idea that a company's asset in orbit would do business with another company's asset in orbit. Obviously the money transacts on the ground, but they don't really interact with Earth other than that. That's pretty new. And there's going to be a lot more movement towards that. So from a growth perspective, there's a lot of opportunities. From like an investment perspective, we suspect there's going to be a lot of consolidation. It's been being said for a while, but there's a lot of companies that are building products. So like the world's smallest mini Hall effect thruster, right? That's a really cool company that's got this thing and they're selling it. It could be likely that they get bought up because of that thing. Even if they want to be $1 billion company, they may just sell that piece and another company brings them in. So there's a lot of exit opportunities, even on the smaller end, even if that's like a 2 to 10x kind of return on a like a product company gets brought into a larger company. And then the bigger, we feel that the bigger opportunities are kind of the longer term infrastructure sort of plays. So SpaceX is an infrastructure, like a railroad to space. You have orbit fab, gas station, like actual fuel infrastructure in space and things like that. That's what we tend to look at when we think about big opportunities long term that will survive any kind of bubble or anything like that.
From what you've been saying, it sounds like a lot of the industry is very much focused on just getting satellites up and keeping satellites up. Would you say that that's fair at the moment? That's where the private sector is really really focused on, or is there other areas like passenger traffic, for example?
Well, there is passenger, tourism is a thing. I just don't normally bring it up as much because it gets a lot of coverage. So it has gotten a lot of coverage. But you have folks like Blue Origin, and SpaceX even does that, as well as Virgin Galactic, where and it is an important piece because it really starts to open people's minds, like just to see that there's a well-known overview effect that comes along with it. That tourism will have its own kind of bubble of bubble's the wrong term there, but have its own little sphere of subsectors around it that support it. There's a lot of different things. Generally speaking, though, one way of thinking about it is, and I try and remind people of this: space is really not an industry; it's a location. We view it as, in the relative near future, it's its own economy, right? Because it's just a location where industry takes place. So, like we said, gas stations or whatever that are recently, that could just be happening in space. You wouldn't have thought about that a while ago, but in theory, down the road, you just have McDonald's and fast food or whatever in space too. Who knows? But that's maybe far down the line. But as that happens, you tend to need things to move, by location. So Earth obviously has robust economies. It makes sense that you're going to move from Earth to low Earth orbit, medium Earth orbit, and kind of out. The next thing that's happening right now, which is pushed a little bit more by government contracts, is the lunar economy, which is there's quite a bit of money being pushed towards landers and things like that. But that is happening. Those might be more of like a 5 to 10 year kind of cycle. It's hard to know exactly. I have some people telling me it's less than 5, and some people tell me it's more than 10. So take everything with a grain of salt. But that's a lunar economy that will develop as well. But it's going to be, generally speaking, what happens is the government and less return centric folks will push that as the edges of the envelope a little bit further, right? So I would suspect As lunar becomes more privatized, then you move to the government pushing more towards, back and forth with Mars. And as Mars becomes more privatized, so on and so on, right? And that's a logical approach. Who knows what will happen in, 20, 30 years from now. But yeah, that's the way I think about it.
Are there any areas that you think are currently underfunded and where there's a real opportunity for private capital to make a difference?
In general, there's just underfunding. It's kind of, there's several different things, and it's heavily dependent on your theses, right? One of the things that we like is like compute on orbit, because it doesn't sound very interesting, but computing on orbit, we have this $1 trillion industry that is compute hardware, right? AWS is and all this stuff, big data centers that all exist on Earth. Nothing like that exists in orbit. Like what exists in space right now is people building their own. It's essentially back in the 70s. People are still in their garages building their own, specific computers to go do stuff in space, where you can imagine there's quite a bit of catch up to happen there. But there's reasons for that. You need all the stuff that you still need on Earth for compute to work, but you would also need there's radiation effects to take into account. There's thermal management issues to take into account. And then there's like a list that 3 times that long that you have to take into account when you're building a computer for space. But that makes everything more efficient in space. That makes talk about if you had a much smarter computer or a much smarter brain on your satellite in space, you'd be able to dock much more efficiently with let's say, a gas station, or grab a piece of debris much more efficiently. Now, all these companies right now are building their own craft to do all that, right? And they kind of have to build their own AI and all this other stuff. So there are companies who are trying to turn that into something that would be um, more kind of like a service. Like you would just, if you were building a company today, I don't go build my own data center and buy a rack. Some people might say you should, but most people just go to AWS or Azure and buy some space and put all their stuff there, right? So there's an ease of net new innovation that can happen if you have that kind of infrastructure in place. So there's several companies attacking that angle. I do think orbital servicing has a lot of unknown or untapped efficiency opportunities, but I would say at large, the big thing is early stage companies just are underfunded in general. And the reason is because there's a lot of money that feels like it's going to space, but the last report I looked at, so double check me on this, but I think the last report I looked at was something like 70 or 80% of all that money went to less than 10 companies from 2021. Yeah, it's kind of crazy to think that that it's heavily top loaded. So even though it's growing net new, it's really going back into people that are just putting more money back into their portfolio companies to kind of make sure that they win, right? The early stage companies, still a lot of opportunity, a lot of innovation to happen, a lot of risk, right? But that's kind of one of the reasons why we like the crowdfunding model, because individually, small checks, and we're talking checks that are less than 25K down to as little as $100. It's much easier to risk $100 check individually, and take a flyer, right, on and potentially a big winner, and have 1,000 people bring that together, or 10,000 people bring $100 checks together, and potentially have a nice win as a whole, than it would be to one VC who has LPs to answer to write the $1 million check, right? That says, well, you don't even have revenue yet. How can I take that risk on you? So that's where we see a real opportunity for, especially retail investors, because unfortunately, most venture models, they either have to take a lot of risk or they just won't take it. And so there's a lot of innovation that's sitting on the sidelines. And as I mentioned, one of the nice things about this is the industry being early enough is there's a lot of opportunities for roll-ups. So while they may not be the billion-dollar unicorn exit, you kind of have a nice opportunity for people to be buying out these companies, and they'll be relatively quick wins, even if they're smaller, like let's say a 2x or a 5x. So there's going to be quite a few of those opportunities as well. So if you can kind of get a good sniffer to say, maybe this is a billion-dollar company, but maybe the low end is it's a product company, then you're kind of hedging your bets there a little bit. So that's the way I think about it. Early stage is a lot of opportunity because the markets are in theory infinite. So you can kind of really start to see where things go. Um, if you can take that risk, if you can handle the liquidity risk, long-term liquidity here is space is longer than most, software markets. But it's not, it's, by the way, much shorter than it was just like I said, 5, 10 years ago. You're talking now, most people can get up into orbit within 1 to 2 years. It used to be longer. Some people are getting into orbit within months. From like, they get a little bit of money, then they can book their flight and they're up within months. And so that is happening too. So that whole paradigm of getting, to revenue faster is happening. But as far as like scaled kind of, markets and things like that, you would want to be thinking about these are probably multi-year, 5 year, 10 year kind of time horizons, depending on what exactly their business is.
And in terms of the likely exit, it's most likely that you'd see a small company like this get bought out by a bigger company that's interested in their technology or what it is that they do. It's kind of that this is where they're at their early pioneering stage. If they get established, then that's when you're, as an investor, that's when you're seeing your exit, because that's when it's being bought out at, as you say, times two, times five initial valuation.
Yeah, and that's not all of them. I think I know that there's data out there that will show you, what are most of the exits, right? Most of the exits do take up this like 20 to 50 million. That might be old now. Maybe maybe that's inflated like all the valuations and stuff has. But most exits tend to be in this, kind of sub 50 million category, just because that's the nature of the beast. It's a little bit easier to write, a big company to do 10, $50 million checks and bring them together into a nice product portfolio or something, than to just go all the way public, right, and hit, hit all the lights green and go all the way public, and it's just going to be a smaller chance. But having said that, it really does depend on what the company can, or even their aspirations are. By the way, we have many people who are totally fine with, they may have $1 billion company on their hands, but they're totally fine with being bought out for 100 million and then going in and helping to build that $1 billion company within a larger company. So that can be a founder thing. Sometimes they come out and state what their goals are, and I'm going to do this, and you get a good sense that that's what they want to do. And sometimes they don't. Sometimes you just have to stay flexible. And then the other thing is like, sometimes it's just a business, right? If they have one product and don't have really plans to really expand that, or they don't really have a roadmap to take on a bigger market, you can probably start to calculate in your own head. There's probably not a lot of opportunity for them to take 100% of this market and then be $1 billion company. They're probably going to, be a smaller player and maybe a good buyout opportunity. But a lot of that depends on go-to-market strategies and all that other stuff. So when it comes down to it, it's a depends sort of answer. But there are some that you probably get a better sense of. These are potentially massive markets that they're playing in, and then others these are potentially more product style markets.
I remember many years ago, I went to the Kennedy Space Center. One of the things that really struck me was that they had a museum there that was showing examples of the technology that was developed originally for the Apollo missions, that then ended up having applications outside of even aviation,
Yeah.
but in other walks of life. That technology was suddenly useful. Is there an opportunity with some of these companies where they're working on something that is initially designed just for space, but that technology could actually end up being quite useful in other markets, and that way the value of the company goes up as well?
Yeah, and I'll give you a very specific example. We have this is a deal that's on our platform, and so it's all top of mind for me. So take it with a grain of salt. There are other examples here. There's a company called Infinite Composites that's raising on our platform. They are making a linerless composite pressure vessel. So the industry right now, think gas tank, for whatever, right? The industry right now, you could imagine the tank that goes in a barbecue or what have you, right? It's just like metal. It's super cheap. As you need more efficiency, so more airplanes, spacecraft, things like that, you want to make that as as strong but as lightweight as possible, right? I'm oversimplifying that math there, but that's essentially what you're looking to do. And so when Infinite Composites, they were able to figure out how to take an industry that was essentially wrapping composite material around metal tanks, to reduce the metal size, so reduce strength, reduce weight, but still have strength there. they were able to figure out how to take the metal tank liner out entirely, right? So now it's just composite materials, which actually has a lot of other benefits in addition to being lightweight. And so they're one of the more efficient in the industry. They will tell you in the universe, and I've seen some of the numbers, but I'm not a scientist to be able to say that's not real or not. So, but these tanks, part of some of the people they're talking to are not just spacecraft, right? They're talking to, they've had conversations with SpaceX's of the world and NASA's of the world on spacecraft to take fuel for spacecraft, but they're also a very nice potential opportunity for a Boeing or a large aircraft maker, because something I didn't even think about, but they were telling me was, those little, the air tanks, right? The little oxygen tanks for everyone, the, little cord that comes down. They all have a little oxygen tank. Everyone has their own. It starts to add up over time with weight and things like that. So creating efficiency in an airliner is much more important. That is one example of taking something where efficiency is like super important in space to where it's just slightly less important in aircraft to then moving down. And one of the things that they're looking at is the hydrogen economy, right? Moving, if you have hydrogen fuel cells, in cars, you still want to have an efficiency factor there. Why have an extra big tank if you don't need it? That's extra weight and all that other stuff. So there's going to be opportunities like that. It essentially is almost always that way. There's some things that are so specialized for space that it doesn't work. But there are a lot of examples of crossover technology where, because of the efficiency required in space, the margins are there to solve the problem. And then as you start to figure out scale, the margins come down on the efficiency, and then it just goes mass market. That's essentially the example of everything that's ever happened with space, including things like, the camera in the iPhone, right? Or all the phones, essentially, the miniaturized cameras and things like that came from a lot of the core technology came from space, right? They didn't start there in the phones. They then, got pulled in because people could learn from, technology that came from space. So it's one of these things that happens. Materials is another one, right? Some materials you can only even figure out how to build in space. You need zero G. So there's companies like Space Forge and Varda and others that are doing manufacturing in space, where in a zero G environment you can do better all sorts of things, right? So there's a lot of these opportunities for improving life on Earth. Not to mention that, I mean, just the data is a massive improvement of life on Earth. Weather data is a big one, right? But that's kind of obvious because that's why they're going up there. But even technology does naturally kind of, just make our life better on Earth.
And just finally, could you give us an example of some? I know you've mentioned one already, but some of the other companies you've got raising money with space ventures at the moment?
Yeah, so right now we have three, and we'll probably be doubling that number in the next 2 months. But yeah, so the three we on our platform right now are Exospace. They are, and this was an example of compute in space that I mentioned. Again, fresh, top of mind kind of examples when you're diving into that. Working on machine vision in space. So, being able to do that in space is very difficult. It's machine vision is hard, compute intensive. So being able to do that in an environment where you don't have as much power and all that stuff is a hard thing to figure out. Like I said, Infinite Composites with tanks. We have another company called Cosmic Shielding Corporation. They have a material that's been perfected over the last few decades. It actually comes out originally of a NASA IP that then has been perfected, that can create material that can shield, whether that's astronauts or computers or any kind of precious cargo payload. That it's a shielding, radiation shielding that allows them to do that, and it's also, by the way, by the nature of being an advanced material, it can also be stronger than Kevlar if put in the right formation. It can be all these cool stuff. And so, they're looking at shielding spacecraft and potentially even building spacecraft out of this material. So those are the three companies that are on the platform right now. We just launched in September of 2021. So this is all very new. But we've been in the industry for, just doing this for 2 years in preparation and talking to all the companies. So when I say it feels like small numbers, but we are actively talking with hundreds of startups. So it's not like there's only three and we just found the three, right? There are quite a few more companies that we can't even help. Companies we can only help U.S. based companies per regulations is one of the limitations of the regulations right now. So there's a lot of great companies in the UK and other places as well that we want to help, but we can't. So there's a lot of opportunities in the private investment sphere.
Well, thanks very much indeed for coming on the program today. Where can people find out more about Space Ventures itself and what you're doing?
So our website, obviously, with the deals and a lot of the information that I've given is spaceventures.com, all one word, and you could just go check that out. We put a lot of effort into making it easy and understandable and things like that. And then obviously you can follow me. I do LinkedIn and Twitter. So Aaron Burnett on LinkedIn or on Twitter, you should be able to find me there relatively easily.
Fantastic. Thank you very much indeed for your time today, Aaron.
It was fun chatting.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.